This is The Gist, the essential podcast for the discerning listener. Welcome to The Gist. I'm John.
And I'm Mary. It is Friday, July 24th, 2026. We are your smart friends on the go.
We cut through the daily noise to show you who benefits, who pays, and where the resources are actually flowing.
Let's start with the gist view. The big number today is 100. That is how many dollars it now costs for a single barrel of crude oil.
According to the Wall Street Journal, this price spike is sending shockwaves through the global system. Stock markets are slumping, Treasury yields, which is just the interest rate the United States government pays to borrow money, are hitting the highest levels of President Trump's second term.
Expensive oil acts like a massive regressive tax. It takes a bigger bite out of the wallets of everyday people and everyday businesses. Central banks see this driving up inflation, so they are forced to keep interest rates high to cool down the broader economy.
Exactly. But let's look at the power dynamics. Who actually benefits from expensive oil? In the short term, oil producers. But in the long term, green energy.
Right. When fossil fuels get this expensive, big money rushes to build renewable energy infrastructure. High oil prices act like a giant financial magnet. They pull capital straight toward long-term green alternatives.
But right now, the pain is very real, especially for emerging markets. The United States dollar is surging in Asian trading. And remember, global oil is priced in United States dollars.
Imagine your landlord just raised your rent, and you have to pay it in a foreign currency that is suddenly much harder to get. That is exactly what developing nations are facing.
They have to hike their own interest rates just to defend their local currencies. If they leave their exchange rates undefended, they import hyperinflation. It is a compounding crisis that is even dragging down the price of gold.
Let's shift to the global overview. All that global capital has to go somewhere. Right now, a massive chunk of it is flowing into India's private medical infrastructure.
Bloomberg reports that Manipal Health Enterprises is launching an initial public offering, or IPO. They are looking to raise nearly 1 billion United States dollars. That is about 92.7 billion rupees.
This isn't just one company raising cash. It shows a major structural shift. Global investors are hunting for growth, and they are betting big on the rapid expansion of India's healthcare system.
Moving over to Bangladesh, we are seeing another structural shift. President Mohammed Shahabuddin has announced his resignation. He officially cited health reasons.
But political context is everything here. Bloomberg notes he was a long-time ally of recently ousted Prime Minister Sheikh Hasina. His exit dismantles the old ruling coalition's very last grip on the government. The institutional deck is being totally reshuffled.
Back in the United States, let's look at that green energy boom we mentioned earlier. NASA just highlighted a massive new solar and battery storage facility in Utah.
We're talking about nearly 1 million solar panels covering a dry valley floor. It now ranks among the largest in the region. This is what massive capital reallocation looks like in the real world.
Meanwhile, in the global tech race, China is playing defense. Bloomberg reports Beijing is pushing for urgent clarity on upcoming artificial intelligence talks.
Artificial intelligence is the ultimate economic resource. Beijing wants to figure out the rules of the road before the Trump administration rolls out a new wave of tech sanctions.
Let's bring it closer to home with the European perspective. Big tech is facing a very expensive toll booth in the European Union.
Euronews reports that Brussels just hit Google with an €890 million fine. This falls under the Digital Markets Act, or DMA. The DMA is Europe's strict rulebook that heavily regulates giant tech platforms.
The European Union says Google is distorting competition. They want to force open the market for smaller startups. But look at the incentives here. The European Union is basically running a proxy industrial policy.
Right. They are prioritising collecting regulatory fines over keeping the broader economic relationship stable. And the United States is pushing back hard.
Politico Europe reports that the United States Trade Representative, the agency directing American trade policy, is sounding the alarm. They warn this creates massive uncertainty for exporters.
It also risks a major trade war. The Trump administration is already preparing new duties that will test last year's fragile trade truce.
We also need to talk about the physical climate in Europe, because it is severely impacting state budgets. The Guardian reports that extreme heat has forced 30,000 people to flee wildfires across France and Spain.
The Mediterranean Sea is currently 5 degrees Celsius hotter than normal. This physical volatility is incredibly expensive. Governments are being forced to divert massive amounts of capital to emergency infrastructure.
It also drives up regional risk premiums. Simply put, doing business and insuring property in southern Europe is getting significantly more expensive.
Speaking of doing business in Europe, why is it so hard to build a truly global European bank? It all comes down to local politics.
The Centre for Economic Policy Research, a prominent network of economic researchers, points out that Europe's banking union is still incomplete.
Banking markets here are deeply fragmented. Local politicians want to keep control of their own banks. They prioritise localised political power over building cross-border scale. That regulatory friction blocks global capital and structurally constrains growth.
Finally, a massive political realignment is underway in France. Politico reports that the far right is gaining serious voter momentum.
Voters increasingly view the political centre as vapid and discredited. This isn't just about culture, it is about where the money goes.
Exactly. A shift to the right means French state resources and capital allocation will aggressively pivot toward protecting national borders and domestic industries.
So, what is the temperature today? We are seeing intense friction across the board. High oil prices are squeezing global commerce, but acting as a massive catalyst for the green energy transition.
Meanwhile, fragmented regulations in Europe and looming trade wars show governments tightening their grip on both capital and technology. It is a volatile map, but from Indian healthcare to million-panel solar farms, money is finding new paths to grow.
That's it for today's episode. If you found this breakdown useful and want to stay ahead of the curve, you should definitely join our community.
Get the gist in your inbox every morning for free. Just tap the subscribe link right there in the show notes. Have a great weekend, and we'll see you on Monday.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.